Hello, fellow traders. 'Tis I, the Rumpled One, coming to you on Wednesday, June the 10th. The year's 2020. Let's talk trading. Dot the I, cross the T. Do you know what that means? It means that when you have a task at hand, you pay a great deal of attention to the details. Now, I want you to know something, fellow traders. These videos are for educational purposes only. Your results may differ from mine. Trading is extremely risky. You can lose all of your money. If you need trading, investment, or financial advice, seek the advice of an accredited financial professional. You know why traders or people who put out books and videos and talks, they have to have this disclaimer? Because that's part of dotting the I and crossing the T. Because especially if they're licensed, if they don't do this, they could wind up getting fined. So what's that have to do with trading? Everything. You see, many times you take something for granted, you make an assumption, and the next thing you know, you're looking at a loss or a missed opportunity. In fact, one of the reasons why I came up with today's topic was I missed an opportunity because in the morning, sometimes I'm up at like 3 a.m. my time, 4 a.m., but I'm still in bed. But I have my upstairs computer and I take some trades, horizontal when I'm trading. And then later, I come to my downstairs computer. Well, the downstairs computer, that's where I do the programming and everything, and that's where all the software resides. And every now and then, I might do something upstairs and then email it to myself and put it on the computer downstairs. And then, of course, systems get updated and things happen. Well, if you don't go back and check every little detail, something might get turned off or something might get turned on that you don't expect. It's like the first time I downloaded the MT4 MetaTrader to my phone, I put on a trade and I kind of walked away. What I didn't notice was it was a full lot instead of a mini lot. And a few minutes later, I opened the screen and I was up like $100. I'm like, $100? Well, it had moved 10 pips. And so I saw that it hadn't moved 100 pips, so I saw my lot size was wrong, so I immediately exit the trade. So that's because I didn't dot the I and cross the T. I just assumed everything was okay. And sometimes when you're doing your risk management, your stop loss, you might assume that you put it on or that your EA was working properly. But you have to make sure you put that stop loss on because you don't want to lose any more in any one particular trade than you're willing to lose. You know, and in the brain management part, once again, you have to dot the I and cross the T. You have to make sure you stay focused, you stay in the game, and you don't fall prey to any of the brain management tasks that you need to do. You need to fight this because this is your biggest fight, not the market. It's your brain because the pain that you feel, the stress, the mental anguish, the market's not doing it to you. It's how you're reacting to the market. I just received an email from someone asking about the price action. Like you can see here, it says short bias from 4 bars ago. They're saying, price could be moving up on this indicator and you could get cut up. Well, that's because you have to dot the I and cross the T. This isn't basically a standalone indicator for reversal trades because number one, it's an indicator that indicates breakouts. So for example, this one ball was probably here or here, and then it it moved over here and price, just like this three ball. When price got to about this level, maybe it was a 2 and then it became a 3 and it pushed it up. And then you see here it says short bias 4 bars ago. Well, if you would have jumped in right at the beginning, you would have taken some heat and then it dropped down. Or price could have just pushed up. And then even though it said short bias, you'd be taking a loss. And that's one of the reasons why we have an idiot mode indicator. This is a separate indicator. Here, let me put the list up. It's a training wheels. And basically, all that says is if the H1 is green, do not short, And you can see here the H1 just turned red and it says do not buy. Pretty simple. Trade with the H1 candle color, right? So there's many different things. In fact, and the reason I was talking about my upstairs and downstairs computer is that I missed this trade right here, this H1 breakout trade, because something I can't figure it out isn't working. My sound file, I know I have it in the right place, but it didn't alert me this morning when this was happening because I wasn't fully engaged in trading. I was working on something else and I had it going and I was thinking, the alert will sound. But I also had put on the pop-up alert and in the upstairs computer, but the downstairs computer, I didn't have the pop-up alert on. So I have both on because that way if the sound alert doesn't happen, the pop-up alert will happen. So I kind of have a fail safe, a double check there. So when if I know the sound alert is happening properly, then I know I don't have to have the pop-up. Anyway, and as you can see here, price went down to a low of 46. So you had a chance to make 2 pips right there, cutting across the 50. And for those of you who say, well, 2 pips, that's nothing. Well, it's only nothing because of your pip value. If you're trading 10 bucks a pip, that was 20 bucks. Now, to some people, that's not a lot of money, but depending on where you live in the world, that might be literally a month's salary. Some people only get $1 a day. So, and if you here in the U.S., if you just made 20 bucks in less than a couple of minutes, that's minimum wage. That's more than minimum wage in all 50 states. Okay, so it's just you have to trade at a size that allows you to make money while controlling your risk. So yeah, if you have $1,000 account, maybe you trade one full lot, $10 a pip, and if it goes against you 5 pips, you bail. And then somebody would argue, well, if you're only taking 2 and losing 5, blah, blah, blah. Well, yeah, sometimes that might happen. For example, here it went up, but only a little bit. And maybe if you didn't take it, if you didn't just zero out, you might have taken a stop loss. Same thing here. But that's part of your trading plan. I mean, some people actually cut losses at 1 pip. They get in, price doesn't do what they expect it to do, they get out. And sure, they might take a 2 or 3 1 pip losses, but when price does what they expect it to do, they might be bringing in 5 or more pips. Once again, your method, your plan, your portfolio, you got to focus on it, dot your I's, cross your T's, figure out what works for you, and then just do it repeatedly. And as you can see here, we've got another green day happening on the pound. See, it's 496 away from the yearly open, but it's 426 up from the beginning of the month. The opening range, you see we broke out once again. It was 2735 and it hit a high of 2801. So once again, There's pips to be made on that breakout of the opening range and on the breakout of the previous day. You see, only a few inside bars happening. Price is definitely on the move. Here we see that breakout. It's 51 pips off the high. You had a chance to make about 50 pips taking that breakout. As far as the range, we only have 5 over 100. Pound at 96 at the moment. Okay, here we go. Pivot point traders fading the pivot. You had one signal here. It didn't hit the pivot, but you still had an opportunity to make pips. Rats. Rats were feasting today. The red rats especially. Whoops. I don't know why that keeps happening. But here on the pound, you see there was a nice trigger here. Another one here. And if you put your cursor there, let me widen the chart. Once again, to widen the chart, put your cursor here. You see the little left and right arrows? Hold down the left mouse and just drag it to the right and it expands it. If you put it here, hold down the left mouse, drag it to the left, it compresses it. But you can see here, there's a nice rat reversal here, a nice reversal here. You can just see there was a hot holo trade there, highest open, coming back down across. And once again, for those of you who get cut up, move up a time frame. H1, you see all of this. Once again, H1 candle color in the rat zone, H1 candle color in the rat zone. It's not that difficult. And if you can't get it with the hour, move up to H4. H4 candle color in the rat zone. Here we are. At this particular time, there wasn't enough range, but you can see here, a lot of times you'll get those reversals, even at the H1 candle. One of the reasons I use H1 instead of H4 is depending on your broker time. You have different starts at H4, but every hour's always starting the same. Pivot traders, we already showed you what happened. We missed a pivot, so now we've got 3 missed pivots this month. Wick zone. Somebody asked me for the wick zone. You don't need the wick zone indicator because you can use TRO-HL5 to do the wick zone. So you don't have to get the donational. And this is an old 2014 donational. Still works. I still use it. But you can use the TRO-HL5 to show you the wick zones. And here we have just a simple H1 breakout chart. And this is what I'm trading this month is H1 breakouts. And some hours I get a trade and some I don't. And I just want to, I'm doing it to show you, in the part of the black belt trading, this is the first trading technique you should use. You take the H1 breakout. So you have your long trigger and your short trigger. You get to sit and wait. You're going to learn patience. You're going to learn to wait for your signal. You're going to learn to take the signal and not second guess it. You're going to learn not to jump the gun. You see here, it didn't quite get to that. That's 618. The high is 613. You don't rush it. If you rushed it, you would have gotten your fingers burned. You would have lost money. So this one simple method is all you do. And you don't even have to have all the gauges. They just showing you the stats. But the fact of the matter is, you see here, there was a breakout to the high and then the big break to the low. You had another inside bar. 2 reasons to take the breakout. But you're just going to have to wait. Maybe it happens this hour. Maybe it doesn't. So then you wait for the next hour. So that's it for today, fellow traders. I hope I've answered your questions. I hope I've given you something to think about and something that you can use every day when you trade. Remember, it's not what you trade, it's how you trade it. So So drain the banks. And if you're new here, subscribe, like, share.